Welcome to the stage, Dave McClure from 500 Startups and Mike Butcher.
Hello, everyone. This is probably the first time at a Disrupt where delay because the amount of F-bombs this man is known for throwing out at these kinds of events. So I may as well start. Fuck it.
Wow.
Do not say shit, fuck, or bugger. Right. I'm kidding. Say what you like. Dave, now look, your public persona, your reputation is of incredibly, combative. You are not afraid of.
I'm a teddy bear. What are you talking about?
You're a pussycat. And you were also incredibly well known for basically being on a plane a lot.
We get around a bit.
You're the original geek on a plane, in fact, which you started that whole Geeks on a Plane tour. When you look at the international news from day to day, when eventually CNN gets around to airing it, sometimes you just think the world is just incredibly chaotic. It's basically everyone outside of New York is a member of ISIS. What the hell is going on out there, and why do you do what you do? Why do you go so international with investments?
Well, I mean, I think we invest a lot internationally because we think there's a lot of opportunity, and contrary to popular belief, not everyone in the Middle East is a member of ISIS. Actually, there's a lot of talented entrepreneurs there who...
Kidding.
Yeah, I know, surprise, right. There's a lot of really amazing tech going on in the Middle East. There's some big businesses being built in places.
Give us a flavor. I saw you in Dubai in a rather fetching outfit.
Right.
As we smoked a hookah pipe. What do you see? I mean, what kinds of businesses?
Not that we're an investor, but Souk.com is a very large e-commerce business out of Dubai that's serving the entire Arabic-speaking market. There's a couple of companies in different places that are doing really well that you probably haven't heard of. A company called Karabish that's out of Jordan, that's one of the largest YouTube content properties. Another one called U-Turn out of Saudi Arabia in Jeddah. Several businesses in Egypt that we've invested in. One called Wazaf was actually started during the Arab Spring Revolution, and it's kind of a LinkedIn for the Egyptian market, and they're profitable and growing.
Do you get a sense that the Arab Spring, which obviously only kind of went off half-cocked to some extent, do you get a sense that awakening actually helped?
Yeah, I do. And I mean, although the political and other types of reforms that may have gotten some progress but not all the way, I think on the tech scene, there's been a tremendous amount of change and awakening that's been happening in a lot of the Arabic-speaking markets, particularly Jordan, Egypt, probably Turkey, although that's not necessarily Arabic.
You're also a big fan of Asia, aren't you?
Yeah, we've done a lot in Asia. We've probably done, I guess, over 300 investments internationally, probably about 100 in Asia, maybe 100 in Latin America, and then 100 across Europe and the Middle East.
I mean, you don't really need to do this, do you? I mean, you were a part of the...
We don't need to do... This is not a social mission. I'm a greedy fucking bastard, and we're doing this because we think we're going to make money. For the same reason we invest in women, and we invest in minorities. We think they're underpriced assets that the rest of the world is missing. And there are lots of geographies around the world that are going to be really, really big economies. I think there's this myopia on the behalf of a lot of U.S. venture capitalists to not really go any place except Silicon Valley and New York, and internationally very rarely outside of maybe London.
That's easier. I mean, you were part of the...
It is easier.
Yeah, I mean, you don't need to do all of this work.
But if you look at like smartphone adoption rates and the rate of sort of payments online increasing and delivery and logistics, we are not keeping pace with the rest of the world. Very, very explicitly, if you look at places like Nigeria, Pakistan, Iran, Turkey, Brazil, Indonesia, these are multi-100 million person countries. And as the smartphone penetration and credit card or other online payment penetration tips from, say, 30% to 50%, they become really, really interesting places to do business. there are nowhere near the amount of capital in those markets as there is potential that's coming in the next 3 to 5 years.
Someone more skeptical might say that your big exits like Credit Karma and Twilio haven't been the international exits that you talk about.
Those companies haven't exited yet, but I like your thinking there.
Sorry.
We've had
unicorns, the billion-dollar valuations.
Sure, but we have an investment in Grab Taxi out of Singapore that, if it's not a unicorn yet, is certainly on the way. Of the $600 million exits that we've had, Vicky, one of them was out of Singapore to a Japanese company. So I think people, again, they look at the history and say, well, there's never been any big exits in these international markets. That's not going to happen. And then if you look back historically, well, yes, there weren't 3 billion smartphones around the world either, and most of those aren't in the US. So like if you're looking backwards for the map for the future, you're going to be looking up your own asshole. You know, you do need to kind of look over the horizon a little bit, look at the demographics, look at the trends that are going on, and maybe take a little bit of risk in going ahead of when those things actually occur.
I mean, you're at the point now where you're no longer 500 startups, you're 1,000 startups.
We've done about 1,000 investments in the last 5 years.
With that number, surely you must have a number of flameouts.
Yeah, probably I would say at least 300 of those companies are dead or dying, and I would expect another 300 maybe over the next couple of years. I think.
You're relaxed about that?
We kind of are aiming for 15 to 30% of our portfolio to get to an exit, and maybe 5 to 10% to get to a big exit, big being 10x or better, we hope. So I'm very comfortable with those numbers. I think that's actually not that different from maybe the rest of the industry. We just happen to do that at scale.
You've done quite a lot of things. You've got the Tuk Fund in Thailand. You've got
just announced a fund for Thailand, and about a month ago we announced one for Korea.
You're doing Korea. You're quite bullish on Asia. You're interested in the Arab world.
By the way, Asia, about 3 billion people. That's why we're bullish.
No.
Yeah, I know. So, whoever thought?
Where did they find them all? Latin America, you're less so. Africa, you're not doing
we haven't
Sub-Saharan Africa.
done as much in Africa yet. We have an investment in an incubator in Nairobi. We've done one investment in Ghana and a few in Egypt.
Is there a sense that that's going to be kind of just too to get into?
No, not at all. Actually, I think Africa is a huge opportunity. We just haven't gotten there yet. I would expect we'll probably do more there in the next year or two. And you mentioned Latin America. We are bullish on Latin America. We've done a lot, particularly in Mexico and Brazil. Again, Spanish is probably one of the most populous languages in the world. Brazil is a huge country that's sort of growing very quickly. So, and again, there's arbitrage going on there. Those are 100 and 200 million person markets where there's maybe 5 active Series A VC firms.
You're very high profile. You've got a huge Twitter following, huge Facebook following. I remember sitting next to you once in London where for a good hour you did nothing but like and retweet things. I mean, you have big presence, big social presence, you're a big personality. But is there a sense that you're a bottleneck in your operation? Is there any kind of...
I think there's a lot of people who think that 500 Startups is just me, and that's really not accurate. We have 50 people on the team. About 20 of those are making investment decisions. The accelerators are really run by 3 different teams that I'm not overseeing. They run pretty independently. So I mean, definitely I'm involved in a lot of different things, but we're a larger organization than most people understand.
You're now across 12 countries. You have 50 staff. You've also got you've got unicorns, and you also now have, you call them Centaurs. What's a Centaur?
A Centaur in our world is a 100 million value company, and I think for us at least, those are big wins for us. We probably enter the investment sort of stage a little earlier than most traditional VCs. So when we have a company that we invest in gets to 100 million in value, it's probably up 10 to 20x or more already. I think both of our first 2 funds I think have at least 1 unicorn and at least 10 Centaurs. We also have lots of My Little Ponies, and we love those too.
What's a My Little Pony?
My Little Pony is everything that's not a Centaur or a unicorn, but where we think we're going to make money. And there's a lot of small wins in our portfolio that are still going to be, great stories, both for the founders and for their employees and for customers. And, we think we can make money even on sub-$100 million exits as well.
Speaking of unicorns, you recently came out lambasting people who, lambasting the so-called dinosaurs, you call them, to continue the animal theme.
Yeah.
The big corporates who are going to be eaten up by the Ubers of this world.
The point that I was trying to make is I think a lot of people are sometimes in disbelief over unicorn valuations, and myself included. I think, for every sort of 10 unicorns, probably 2 of them or 3 of them are going to really be worth that much, and the other 7 or 8 probably are overvalued.
Your language is a lot more fruitier than that when you were talking about it.
Yeah, but the point that I was making is that I think people don't look at the public markets, and, if you took the top 500 companies that were public companies and you looked at their tech savvy ability to hire talented tech people, ability to sort of retain those people, ability to compete against other startups, I'm very pessimistic. I don't think probably 80% of those public companies survive the disruption that's going to happen. And so when you look at those companies, they have 10, 15, 20 sort of PE ratios on them, essentially suggesting that these companies' cash flow and earnings are going to be the same for the next decade or 2. That's just clearly wrong. Those companies are going to get disrupted in the next 5 to 10 years, and they're quite considerably overvalued. At least a number of them are. And you might suggest.
Which ones would you consider overvalued?
Well, I just think if you look at anybody that's not in a tech area, what's happening to the market? You have a traditional, not online company that's selling retail. 30 to 40% of their customers are now buying online. Probably that number increases in the future. They have absolutely no idea how to operate online or go after getting customers. And I think that's really going to result in a pretty substantial vulnerability for those companies in the future. I think those companies can hire technical talent? Sort of. Do I think they can really retain it? I don't think so.
You're in the middle of raising your 3rd fund, which you're shooting for, you stated about 100 million?
100 million, we'll see.
When you attack the dinosaurs, do you get the feeling that some of them think, you know what, I'm just not going to invest in private startups?
If I was worried about pissing people off and not having them invest in my fund, I would have shut up a long time ago. I'm not going to be right all the time, but I'm not ashamed to sort of speak my mind. And I think for the folks who are investors in our fund, hopefully they, appreciate the fact that we're a little independent-minded and we don't necessarily do things the way the rest of the industry does.
So who's going to invest in the 3rd fund?
Most of our investors in this fund are international. Actually, I would say probably 80% of them. Asia, Middle East, other places around the world.
Family offices?
Some family offices, some governments, a lot of corporates, a lot of folks who I think actually see us doing things differently than maybe just the traditional institutional investor.
Why do they want to get involved with you guys? What do they see that?
Because we're just very timid wallflowers and we, sort of dance around. No, I think they want to have access to someone who's in the valley, but also someone who is active outside the valley. We're one of the few, I think, VC firms in the valley that does have an international presence and is not afraid of investing in other countries.
I noticed that a Mr. Michael Kim of Sedana Capital called you very creative. Damning with faint praise, perhaps.
Yes.
Investors are actually scared.
Michael runs a fund of funds that has not invested in our fund, and I think he's more comfortable with traditional VC models. I think he's on the record for saying he's not interested in investing in accelerators or funds that have sort of a, quote, spray and pray approach to the world.
Would you describe yourselves as that still?
I would say spray, not pray. There is certainly a method to our madness, but we are absolutely a massively diversified fund. We'll probably have 500 companies in our 3rd fund. And I think it's kind of funny that people like to shit all over that sort of model. If you look at the traditional financial services industry here in New York, there was this kind of progression from individual stock picking, mutual funds, index vehicles, quant funds. There's been a progression in traditional financial markets towards diversified vehicles, towards less cost structure for active managers, and you're seeing a parallel happen in other private market funds. To suggest that spray and pray is somehow not a scientific approach to the market is just completely wrong-headed.
Did you, out of that third fund, you're carving out something you call a distro fund.
Yep.
This is to growth hack companies that need sort of a rocket boost. Do you feel that you didn't foresee that you maybe missed a trick when you didn't have that built into the original plan?
I actually think that we're sort of innovating on that front. We've been doing consulting internally for our companies on growth for about the last 2 years. One of the challenges we saw with that was trying to price it as a consulting service and get startups to pay for it. They had a little bit of pricing sensitivity concern. They didn't necessarily want to put large dollars out to try that out without knowing what the results were going to be. By making that sort of an investment vehicle where we put $100,000 to $200,000 into the company and give them the money, some of which we take back as consulting services, made it easier for them to want to do that experimentation. We're trying to be selective about the companies we want to do that type of deal with. We're basically looking at some of our top seed companies that we think will get to Series A and try and accelerate them into getting the Series A and then double down when they do.
Now, we talk about the international aspect of what you do, and you do say that there are a lot of Silicon Valley investors who are a little myopic. One in particular seems to be a chap called Sam Altman at Y Combinator, who was recently excited to be heading to Mexico City to meet Mexican startups and speak at a conference. And you replied,
"Good for Sam.
Wait, don't they have accents?" You invest in accents, don't you?
We do. We invest in accents. Actually, our team has accents. I think Sam and Y Combinator are becoming a lot more global. They're becoming a lot more diverse. They're investing in women. They're investing in minorities. They're investing internationally, which is great. I have absolutely nothing wrong with that at all. In fact, that's awesome. The only thing I might take issue with is the fact that that's been fairly recent that started happening.
Do you feel you're ahead of the game?
I think those are things that we've been doing for the last 5 years. I think it's stuff that YC started doing about a year ago. Sometimes Sam's acts like that's been happening for the last 10 years, but that's really not been the case. So kudos to them for sort of making some changes that I think make them more diverse. I just want a little recognition that maybe we did that first, and Sam's often fond of saying that other people copy YC, and I think in this case YC copied us.
Interestingly, you're starting a new education class with Stanford. This is going to be to educate angel investors?
It could be to educate angel investors, accelerators, or microfund managers. I think one of the things that we've seen when we're trying to invest internationally is the ecosystems in some places aren't as developed yet. And in addition to helping entrepreneurs, we need to start helping other investors. And in fact,
isn't there a sense that you're kind of maybe educating a whole new group of competitors, or perhaps?
Yeah, absolutely, and some of which we may hire for ourselves, some of which we may invest in as 500 affiliates, some of which we may just co-invest with. But I think we need to open up the playbook. I think we need to make it more clear to people. Everybody's like always saying Silicon Valley can't be copied, and it's that's a bunch of bullshit. Silicon Valley took 50 or 60 years to develop. I mean, it's not trivial to build what's happened there, but there are other places around the world, New York included, London, Beijing, Bangalore, Sao Paulo, Dubai. There are other places around the world where there are smaller Silicon Valleys that are starting to develop, and in places like Beijing, I think it'll be bigger than Silicon Valley eventually, if it's not already.
Two questions, two final questions. Where do you want to be in 5 years' time? Do you want to be up there with the Andreessen Horowitz or against YC, or and lastly and secondly, where are you going next?
I think Andreessen Horowitz operates at a much higher level, larger check size than we operate. I think there's a lot of great things that they're doing in terms of building out a platform. I would say that we probably intend to be the largest VC firm on the planet in the next 5 years. I think we'll be 50. We're 50 now. We'll be 70 by the end of the year. It'd be surprising if we're not 100 by next year. I don't know where we'll be in 5 years, but I think VC firms, surprisingly, are all about investing in scalable businesses, and yet the VC industry itself hasn't been. There's no Amazon or Google for VC, at least not yet. And I think, Andreessen Horowitz and maybe also Google Ventures and perhaps First Round Capital are doing some interesting stuff. I think YC and AngelList are doing really interesting stuff as well.
And where are you getting a plane to next?
We still have a significant presence in the Valley. We're still planning to be, very active in the U.S. But I would say that globally, we're very excited about the opportunities internationally. Asia, as you mentioned, is just huge. That's far more than one market. India has really become an interesting place to invest over the last year or so. As we mentioned before, I think Africa is also huge and really has, probably 10 of the world's fastest 20 growing economies around the world.
Well, wherever it is, I hope I run into you. Thanks very much, Dave McClure.
Great, you bet.
Thanks.